All right, guys, I got a great video for you today. We're going to take a look at JD stock. This is one of those Chinese companies that a lot of people love to buy. I wanted to break down the fundamentals, give you my thoughts if it's at a good value today, if we should be buying it. I'm also going to go over the chart because it looks really interesting, and I want to give you an idea of where I see the JD stock price headed over the next couple of months. So let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. My name is Justin. I am your host. In today's video, we're going to take a look at JD.com. This is a very popular Chinese company. It is a huge e-commerce platform. It is one of the competitors of Alibaba. For those of you guys that are new to the channel, I have made many videos on Alibaba and some of the other Chinese stocks that I like to invest in, like Tencent Music, Xpeng, things like that. I currently own JD stock because I've been dollar cost averaging into it for a while. So I will link all of the videos on my Chinese stocks that I've talked about and invest in right here, so you can check those out. Today, guys, we're going to focus on JD because the chart is looking very interesting. Like you all know, the Chinese stocks have gotten beat down over the last couple of months, but they are starting to get to that point where it looks like the bottom could be potentially being put in. So is this the time to buy JD stock, or should we, wait and, move on to something else? Overall, guys, the macro conditions still don't look great, and I do think the market has further downside. However, my goal with this video, guys, is to identify if this is a good long-term buy, if we should dollar cost average into it, or if there is a nice short-term trade setup on the chart that we can use as a swing trade. Real quick, guys, before we get started, subscribe to the channel if you're new around here and want to see more videos like this. Come join us at the Patreon if you want to get all of our trade setups. And Day One Squad, I love you so much. Thank you for your support. But let's jump in, guys. First thing we're going to look at is their earnings report. They posted this back on May 17th. As you can see on GAAP EPS, they posted about 40 cents, which was a beat by 16 cents. The revenue was $37.8 billion, which was 18% year-over-year revenue growth, and was a beat by about $3.06 billion. Guys, take a look at this down here. The annual active customer accounts increased by 16.2% to 580.5 million in the 12 months that ended in March 2022, compared to the 499.8 million that was in the 12 months prior that ended March 2021. Yeah. First one, 2022, second one, 2021. But so guys, their accounts are growing, their revenue is growing, their EPS is growing. However, they've got a couple of issues. Let's jump over to the checklist and I'll kind of, show you what I look for. These are the key points that I want to see in order to invest into a company. As of right now, guys, you can see the stock is currently priced at about $64.33. The market cap is around $100 billion. That's a lot of money, so we got to make sure that that is a justified market cap. The trailing 12 months revenue, $155.83 billion, so massive revenue. The trailing 12 months net income is negative $1.6 billion, and that was the most or the biggest loss that they've had in net income ever, and it was in 2021. The trailing 12 months net income margin is negative 11%, and the trailing 12 months free cash flow was $4.75 billion. So for those of you guys that watch the channel, you know that I love free cash flow even more than, I like net income. So very nice to see that they've got, $4.7 billion in free cash flow. The free cash flow margin is only about 3.05%. But nonetheless, when you're doing, a lot of revenue with that much net income, 3% is still pretty solid. No dividend and currently sitting at about 1.557 billion shares outstanding. So if we go down to the checklist, guys, when it comes to growth, really good on growth. Their 5-year compounded annual growth rate on revenue is 28.73%. So big check mark there. We like to see that. The net income 5-year compounded annual growth rate, however, is negative 34%. So definitely not what we want to see there. It would really be nice to see them start narrowing those net losses but currently their net losses are widening. So they got to figure out how to do that, bring that down. I don't know why their net losses are widening. That's something you would have to take a look at, but nonetheless, still red, not what we want to see. The 5-year free cash flow growth on average is 18.23%. So a little bit different than compounded annual growth rate. This is the free cash flow growth over the last 5 years on average. Averaging 8.23% a year is huge. If they can continue to grow their free cash flow year over year at 18%, that's huge, guys. It's exactly what we want to see. When it comes to value, they have no PE because their net income's negative. Their price to free cash flow in the trailing 12 months is 20.8. So literally right there in line with what we want to see. It's a fast growing company. I think they can be awarded a 20 times multiple on their price to free cash flow. If you want to give them a little bit more, I think that would be too aggressive. But if you want to be even more conservative, you could drop that down to about a 15, and that would bring the price down by a few bucks. So you would probably need to see it fall somewhere around 59, 60 bucks. But nonetheless, right there in line with what we want to see. I think that 20 PE or price to free cash flow is definitely justified. Their shares over the last 3 years have gone up by 9%. So they've issued 9.2% of more shares over the last 5 years. That says 3 years, but it's 5 years. So not what we want to see there, guys. We want to see them buying back shares. But what can you expect? I mean, their stock price has done nothing but essentially go up since they IPO'd, so it makes sense that they've issued shares, and it isn't a massive amount, especially over 5 years, but who knows? Maybe the stock price is down a little bit, they'll start buying back. Something to keep an eye on. You don't want to see that trend continue. When it comes to the chart, we'll jump over there in a second, but let's jump into the discounted free cash flow sheet so I can give you what I think the stock is worth intrinsically. We got to get our revenue growth, though, for the next 5 years before we do that. So they're predicting, or analysts are expecting, 7.5% revenue growth this year, and then almost 20% next year, 15.28% the year after, 17.25, and then 11.36. And then you can see, guys, all the way till 2030, they're doing, they're projecting 10% revenue growth a year. So we'll just say average 10%, even though these 5 years is quite a bit more than 10%. But let's just be conservative. So if we use 10% revenue growth for the next 5 years, and then 5% revenue growth for the perpetuity after that, which is less than what their analysts are expecting, and then a 3% cash flow margin, that gives us an intrinsic value of about $72.80. So 10% upside from current levels. If we adjust this a little bit and we say, okay, they're going to do 15% revenue growth for the next 5 years, and then 5% every year after, that kicks it up to $89.40. If we say, okay, they're going to bring their cash flow margin to 4%, $120. So you can see, guys, if they can just do what they're expecting to do, the stock looks undervalued at current levels based off of these metrics. If we, are super conservative and let's say they miss on their cash flow margin, they do 2% and they just flop right on their face and they only grow at 5% for the next 5 years, that brings the stock down to $39. So, 40% downside from current levels. So you just got to kind of take a look, maybe do a little bit more DD, see what you think. I personally think that they're going to do just fine. I think the 10% revenue growth and the 3% cash flow margin makes sense to me. So that first number of like $72 is what I think, it should be valued at. With that being said, though, guys, you just got to kind of find your own number. Let me know down in the comments what you think the JD stock is valued at. I'd love to hear from you. But guys, let's go ahead and jump into the chart. Let's get to the fun stuff. This is what really made me make the video on JD, because the chart, it really is looking very nice, guys. So let's just kind of go over some of the basics, right? So we had the COVID crash right back here in March 2020. We just went absolutely insane, peaked out at an all-time high, $108.29. We dumped, went back to test that high from back in November 2020, and then dumped again. Now take a look at where we're at, guys. Very interesting levels. So we've got the inflection zone That was manufactured back in August of 2017 with that initial all-time high, and then back in January 2018, February 2018, it has correlated to this area many times before. You can see it ran up, found a top, dumped, found a top, dumped, and went all the way back down to its IPO lows. Once it went to test that again and actually broke it and back tested it, that's when it went to the all-time high. So that is the most important level on the chart, guys. That $50.50 down to about $48.15. We broke it. Look at how just crucial this is, guys. So back here when we tested that, like I said, that November 2020 high, we dumped again. We back tested the 200-day moving average as resistance and then dumped for the third time. So we had the first high, second lower high, or first lower high, second lower high, and then we dumped straight down. When we broke that zone of inflection, we spent 1 day underneath it and then gapped right back up, spring, back tested the spring. So that kind of created that bullish harmonic, which is beautiful harmonic, guys. Big bullish kind of Gartley bat. You've got the 618 on your B point, lower high on C, but then your D point is an 886 versus a 786. What's beautiful about this is your BC projection is confluent with the 1618, so your C to D leg. Very nice, guys. So we've got our first low, second low for our confirmation low, which is also a slightly higher low. So guys, this is like beautiful right here. This could be very easily played as a short-term swing trade if you're not into the fundamentals. Guys, we've got, like I said, and what makes it even better is that second confirmation low, which is also a higher low, is also a spring back test, a spring after breaking a critical inflection point and then back testing it. So that is just beautiful. And we've kind of got like a little dragon here, like a little bullish dragon where you've got the head, the neck, the first foot, the hump, the second foot, and now you're in the tail. And when you trade these dragons, once it breaks the tail, you're good to trade it. So we're coming up, guys, and we're testing this 200-day moving average for the first time since back here in March. So it really kind of depends on what happens here, guys. If it breaks that 200-day moving average, we're absolutely headed to 81.45. If it doesn't, it's probably going to dump back down to 50 bucks. So very important to watch what happens in these areas. Guys, I would obviously have liked to catch this back down here at the $50 mark on that second low, but here we are. So guys, there's a lot of things we can do here. It's implying tremendous upside. I mean, take a look at your oscillators. There's a couple of things that, I wish were better, but you've got, bullish convergence. So everything is just converging the way it should be. Look at what you did on your relative strength index on the daily. So you made your lowest level of relative strength on the daily back on March 2022, right after earnings. That was the lowest level, guys, since clear back here in September of 2018. That puts you, in the bearish control zone. Then you jumped right back out of it. And then you, back tested after rejecting the bearish or bullish control zone. You back tested the bearish control zone twice before running back up to the highest level of relative strength back on June since, back in October 2021. So you're now back testing the bullish control zone as resistance, though, once, twice, and now for a third time. So that's, I would really like to see it get back above that 60 mark because that's when you could really start to head to higher prices. Look at how many times you've tested that 70 mark and then dumped. So guys, this could be just resetting the oscillator, right? So say you chop around here, kind of reset that oscillator to come back and test, that 50 neutral mark before, running again. So could be doing a couple of things there. There's no bullish divergence or anything right here. Again, you are off that pattern completion zone, so I would like to see it pull back a little bit. But I think if you break that 200-day moving average and back test that 65.38 level as support, then I think you're good to take the trade. I mean, guys, look at the historical price action anytime it gets above $50.50. You get above it here in May 2020, you back test it as support, and then you literally go straight to the top of the zone. I mean, you chop around a little bit here, messing around with that 65.38 level, which is also the B point, but you literally get all the way to, 81.45. You get above it, you back test it as support, you went to the all-time high, you break it, you either come back down to that 65, or you go all the way back down to the $50.50. But it's straight up, straight down in between that level for the most part. So I think if you get back above 200-day moving average, guys, you're good to take the trade because you could see that 81.45 level really quickly. If it gets rejected here and rolls over, you're definitely heading back to 50. And if you break, that 50, 48, 15 inflection zone, I'll see you at 36.75 and more likely $31. The 36.75 is more of a minor level. The one thing on the daily MACD, you are losing your positive momentum. You tried to start building new positive momentum a couple of days ago, but it already kind of started to roll over. So again, that could just be resetting as well, guys. One thing I want to point out here on the daily. So this dragon, it's just a W formation, right? It's just a type of a harmonic. So what if we've got something like this going on where we've got a bullish bat pattern in development? Then we could see something like the bat action magnet move, which would take us to about $86.86. The bat action magnet move is when you've got a bullish harmonic or a bearish harmonic, a bat pattern in development, and you've got an asset that is getting ready to break that 50% mark, which is your B point on a bullish bat. Scott Carney says, which is the creator, the godfather of harmonics, says that it has a very high probability once it breaks the B point on a bat pattern in the C to D leg to reach that D point. So a lot of people will even trade the C to D leg once it breaks 50% of your X to A to B. So if it can, which is also confluent with right where it's at, guys. So again, I think you break that, your bat action magnet moves in play and you're headed to that D point. You could absolutely reach D, sell off a little bit, and it could fail and it could continue to run. Massive long-term uptrend and sometimes bearish patterns in very bullish conditions. If it continues to run, usually underperform. So we've got to break the trend, guys. We've got to start making, serious higher lows. We've got one higher low. I would like to see it make a higher high and then come back and make a higher low. Again, we break it, come back. You'd be set up there. You've got 3 rising valleys type stuff. And now you've got serious momentum shifting and the trend looks to be, turning around. So let's jump over and take a look at the weekly. So guys, the weekly, I have it drawn up a little bit different here. I've got the down sloping trend. I wanted to kind of show you that. Look at this massive bullish engulfing candle on the weekly from back in March, middle of March. That bullish engulfing candle is still in play, guys. I mean, and that was what you broke your heart line. You tested the bottom of the trend. You had the massive bullish engulfing. Then you came back, tested the top of the inflection zone. So that's your spring, back test to spring. You also got back above the 200-day or 200-week moving average, which is fantastic. So guys, this is looking really good on the weekly. You're also starting to build fresh positive momentum. I mean, you're 4 weeks into positive momentum. Take a look at your relative strength index. You reached the lowest level of relative strength on the weekly since clear back here in November of 2018. You broke the bearish control zone, guys. You got right back out of it, back tested it as support, and now you just broke neutral and you're headed to higher levels. So this is like beautiful right here, guys. You're also breaking kind of a down sloping trend line here on your weekly relative strength index. So this is looking good, guys. If we can break this down sloping channel, back test it, I think you're headed to much higher prices. Also, just look at how confluent your retracement levels are on your return. So currently we're sitting at a 382 from your A point to your D point, the retracement this way. Typically assets go either to the 382 to the 618. That's kind of like your golden retrace, right? Look at the confluence though. Your 382 is confluent with that initial all-time high from July of 2020. And then your 618 is confluent with that other initial high from August, that 81.45 level. Your 786 is confluent with the other initial high, that 92.49 level. So there's a lot of confluence here, guys. if I was going to be trading this, right, if we can see some more things develop, we can start to get out of that trend channel. We can break the 200-day moving average on the daily. Absolutely. Next target, 81.45, 92.49, and then the all-time high at 108.29. Typically on these harmonics, these big harmonics like this, guys, your targets are B, C, and A. Typically they go back to test the all-time high. So it's looking good, guys. Now, unfortunately, though, the market conditions are rather bearish, right? The macro's not looking great. The Chinese stocks, however, are performing pretty well. So who knows, guys? Maybe we get something that kind of shifts the macro, the market conditions over in China, and all the Chinese stocks really start to turn around and head to higher prices. So I love what I'm seeing here, guys. I think this is absolutely beautiful. Again, I wish we could have caught it back here because that is just a legendary trade setup. But you're still not in, super bad shape. But you've got to watch a couple of things, guys. You've got to see what happens here. Because if you get rejected, you're headed back. And I mean, it wouldn't even be that bad. As long as it makes another higher low, I think you're fine. Because you did technically make a higher high. You just got to watch it. Got to watch your oscillators. You got to make sure you're not getting, sent back to the bearish control zone on your daily relative strength. Just keep an eye on it. But let me know what you think down in the comments, guys. I'd love to hear what your analysis is on it. Do you agree with mine? Do you think we're headed to higher prices or not? This video is for entertainment purposes only. I'm not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. I'll see you guys in the next one. Peace.